What's up, guys? It's Lee again, back for another crypto video. So I haven't had a video in a while because I've been traveling and just takes time to do these things. So anyway, I do have some advice for you today, and I have been meaning to put a video out because people need advice. I listen to the news, listen to the experts every day, right? And do a lot of my just my trading at night. I'm more of a day trader. You don't have to be a day trader. You can be a long-term trader. And really, that's where the big money is made long-term in any market, stock market or crypto market. So my advice to you today is going to be based on the news and events that have taken place over the last 6 months or so. All right, we've been trending down since May, basically, right? Since May of 2021. However, this is not, in my opinion, and other experts' opinions, this is not a bear market. However, we are in a crypto winter, right? So definitely a downtrend. It's not a bear market because there's still gains to be made before the prices do plummet and stay that way for a long period of time. We're not there yet. At least I don't believe, and other experts. I shouldn't say other as if I'm an expert. I do know a lot about the space, but there are people that know a lot more than me. And those are the people that I listen to, study, watch the news, and all these other things. So first point is that everything is down, right? It's not just crypto. It's all markets. NASDAQ, S&P 500, gold is down, Dow Jones, right? Everything, all types of asset classes are down, including the crypto market. But I can tell you, just as a bit of side advice, the crypto market is most closely correlated with the NASDAQ market. If you overlay the NASDAQ on top of the all crypto market, you're going to see the markets move exactly together. Not exact, but very, very close, like twins almost. So when you see the NASDAQ up, the crypto is up, right? So, and vice versa. NASDAQ is down, crypto is down. And I can't tell you exactly the reason why. I have a good idea, but that's besides the point. So I just wanted to mention that to you. Number one, the market's down because everything is down. It's not down because crypto is down. It's down because the economy is going through some things right now. And I'm not going to bore you with the news. I'm just going to give you the advice that you should know because of the news. First of all, not all news is accurate. Okay, so you have to know what to listen to, what's correct, and what's just not correct. But the key right now is that if you're trying to make money in the stock market or the crypto market, you should be investing in the top assets, the projects that you have most faith in, the projects that have a roadmap that they've executed on, a project that has real use case, a good use case and real value for either this economy or for the world, either now or in the future. Cryptos are mostly speculative assets, which means that they don't have any real use case that applies today, most. But really, it's about what the future is. The future of, it's kind of like the internet and the birth of the internet. The future of the internet was Web 2, where you have YouTube and social media as a part of it. And now you got Web 3 coming, which is more like the metaverse. So you're investing right now based on the future of these assets. So for example, something like XRP that's 60 cents, or even when it was $1, $1.50, it depends on what you're investing in. If you're investing for when XRP is $10 and $20 and $100 and $500, then it doesn't matter what the dips are today, right? So people say, okay, I put $5,000 in, put $10,000 in, and that $10,000 is $4,000, whatever it is, right? Depending on when you bought. But I would ask, were you investing for today? Or were you investing for the long term, like maybe later on when XRP, for example, is more mass adopted and you use in every platform that we have, all the cash registers, all the banks, all the ways we transfer money is using XRP? Were you investing it for then? And if someone told me yes, I was investing in it for then, I'm like, well, it don't matter what your portfolio is today. As long as you believe that asset is still strong enough to get to where you think it's going to get to, then that's what you're investing in. Never mind what the portfolio is now. I would tell you the thing that you should do today is buy more, bring your costs down, or just buy it, period. Even if you bought it at 25 cents and now it's 60 cents, obviously you're up, but I would be buying more. Just keep buying. And the people that, statistically, this is proven out, the people that dollar cost average, they slowly layer money in on a consistent basis, regardless of the prices up and down, they make more money over the long term than someone who's trying to time the market, buy the dip, sell it at the top, it's hard to do that. So that's point number one, is if you are trading for these assets and you're trying to invest in companies that's going to be something much more than what they are later, meaning years from now, then this doesn't matter, right? So my advice is just keep dollar cost averaging. Just keep putting your money into the market for the assets that you believe in, and they'll be there. I can tell you with most certainty, Bitcoin, Ethereum, Cardano, Polygon, XRP, these are very strong companies, and what they're doing is working. Solana, but again, no one can predict the future. Some companies that were great before are not great now. Look at Blockbuster Video, right? They completely went out of business. They have one store that exists today. They're actually coming back with some NFTs, that's other stuff. But anyway, the thing is, it is risky investing in assets, period, right? Regardless of what it is. But that's how you make money, though. So you just have to be smart and try to pick the best assets and hope for the best, right? But that's how you do it, though. You want to buy when the prices are down. Don't wait till the prices, everyone's excited again, everything's green and it's 10% up for the day. And that's not the time to buy. For me, when you're going to be trading on a short-term basis, that's when you sell, right? But if this is long-term for you, then don't, it doesn't matter. Like, just ignore this. Don't even look at it, right? It doesn't matter. Just keep putting your money in, okay? So that's advice number one I would give for long-term traders. Advice number two that I would give you for shorter term traders, people that are trying to make money today, tomorrow, next week, next month, and you truly are trying to take profits instead of like investing long term, then I would tell you don't buy with emotion. This applies for point number one also, but it's less relevant because there's no emotion. If it's long term, there's no emotion that you need to be worried about, right? Because it doesn't matter what goes up and down. But if you're trying to make money today or tomorrow, next week on a weekly basis, then don't use emotion. Use your plan. I've explained that in another video, right? Use the plan that you put in place. You are investing with a plan, right? You should be. You shouldn't just be dumping money in. A plan, for example, would be that, hey, you know what? I'm going to try to take this $10,000. Let's just make $1,000. I want this $1,000 to do as best as it can in the next month, and maybe I'll have $1,500 or $2,000 in a month, something like that. Or you can have a plan that says, hey, this asset here is $2 now, and when it reach $2.50, I think it's going to get to $2.50 in a month, or whenever it does, then I'm going to sell and I'm going to make that percent, that 20% uptick. I'm just going to put $1,000 in, and whenever I can get to 20% for this particular asset, then I'm going to sell at that point. That's a plan, right? So now what happens is that when that asset starts moving up from $2 to, what do we say? $2 is going to go to $2.50. If it starts moving up to $2.50, you're going to start the wiser choice would not wait till it's $2.50. Just start selling on the way up. That's what I said. Sell on the way up, right? Buy on the way down. Most people do the reverse, right? They actually buy on the way up. Oh, prices are doing good. Let me buy. No, do the opposite, right? I'm telling you, 95% of the people lose because they do it that way. You want to be buying here, right? So when that price starts moving up from $2 to $2.50, when it reaches certain thresholds, like maybe $2.15, $2.35, $2.45, you want to be selling at little increments, right? To get to where you need to be. And as a part of your plan, you need to mathematically calculate that out to say, look, if I had $1,000 and I put, and the asset was $2 at this point, and it moves up 20%, then I'm gonna have $1,000. I'm gonna make $200. Sorry, it's gonna $1,200. But you have to say, okay, how much am I gonna sell if I have $1,000? How many tokens can I buy at $2? Right? So you're gonna be able to buy 500. I think my math is right? So 500 tokens. So am I going to sell 200 of them? You got to figure that out as a part of your plan. And you look at your plan, you say, okay, I like this plan. Now I'm going to go ahead and execute it. You buy the asset, and then when prices reach a certain threshold, you sell. That's how you make your money. It's no emotion in that, right? It's like a computer. You can almost set it up. So that's what I'm saying when I say don't have emotion. Do it this way. Write it out. When certain targets are hit, then that's when you sell. If it doesn't get hit, then you don't sell, right? So for example, if the asset took too long, and say you put a part of your plan, I'm going to give this 6 months, I'm going to give it 1 month, right? We said 1 month. If it doesn't work, then you can just sell out and say, look, the price is actually at $1.80 now. It never reached to $2.50. And you can make a decision. Hey, do I want to take a loss? Only way you take a loss is if you actually sell. If you keep the money in there, which I would recommend, if it's a strong project, it's going to get there. It's just a matter of when. That's the variable no one knows is time. If we knew time, then we'd all be rich, right? We know exactly when the prices are going up and down. When is the operative word there? We know exactly when. And then we just put the money in right before and boom. Right. But I would suggest that you wait. You wouldn't give it a month. It's hard to put time on a plan. Right. You can put prices, but time is tough. So anyway, let's just take time out of the equation. All right. For my advice, not financial advice, but take time out the equation and say, look, this asset is going to go from $2 to $2.50. Right now it's at $1.17. Don't matter. You wait. You wait. If the asset is a strong company, you've done your research, it's going to get there. And the stronger it is, it's going to get there sooner than later. It may get there in a day. Who knows? All right. So then you have your plan to say, okay, when it reaches these prices, I'm going to sell. If it never gets there and you did bad research or you just got bad luck and say, hey, this company was the #1 project and it just went to zero. And then you just lost your $1,000. That's the breaks. When you invest, you assume the risk and the reward, right? That's a part of it, is that to make the money, you have to gamble in a way, but it's not gambling because you have a strategy and it should be based around research. So that's what makes it not gambling. Gambling is basically just putting money out there and just hoping for the best with no plan, like the lottery, right? There's no strategy around that. Some people have a strategy, but most people don't have a strategy. They just pick a number and just cross their fingers. That's not like this. Right? You could do research. You can look at the owners. You can look at the roadmap, the timeline, how much money they have invested, the things they plan on releasing, with the utilization. All right, you can go through and say, look, I believe in your use case, and so therefore I'm going to invest in you. So same thing with stocks, right? So that's what you would do in the short term. Don't use emotion. All right, you're never going to be able to predict the actual tops and bottoms in short terms and long terms, right? But you have a sense that what did last week look like? What did yesterday look like? So when you look at stock markets or crypto assets, they'll give you the price change by the day, the price change by the week, 7 days or 10 days or whatever period you want. And you can tell if the price is down from that period of time or up. Will it go further down from there? Who knows, right? But when I see prices going up day over day or over the week, I'm not buying at that point. It does thrill other people because psychologically, when prices go up, it makes us feel like that asset or the market is validated, right? It's worth something now. Now the price is going up, and when the prices are going down, we feel like the prices aren't valid. Like the project, it must be going to zero, right? But that's not the case. If you went to the grocery store and you saw that gallon of milk that was normally $4, but now it's $3.10, do you be like, oh, I don't want that milk anymore? No, you buy the milk, you be like, oh, it's on sale, I want to buy some, I'm gonna buy it. The milk is still good, it's just at a lower price. So it's the same thing with these companies. The companies are still good, but something happened to bring the price down. And that's when you want to buy, right? So look at it like a grocery store purchase. Something goes on sale, you buy more. You don't stop. You don't sell. You don't say, oh man, I can't buy this milk. I'm never buying milk again. No, you might even buy 2 of them because you know you're going to need it. Milk is probably a bad example because it goes bad. But if you have almond milk, then it'll last. I buy 3 at a time, but that's besides the point. So that's another point, is that don't think that you can predict a top or bottom. Just buy when prices are relatively low. That means it's low relative to yesterday, low relative to last week, relative to last month, right? And you buy slowly. You dollar cost average your money in. So if you have $1,000, for example, and the prices are down, maybe you don't put all $1,000. You put 700, 600, 500. Okay, it depends on the market research. Do you feel the prices are going to go further down? If so, then you wait, and then you put some in here, and then you wait. When the price goes back down further, you put some more in. Okay, but that's how you, because you don't know where the bottom is. If the price never go back down, at least you got something in there. But if you put everything that you have in at a down point, what if the price drops down? You have no opportunity to put no more money in, right? Because you have it already in the market. So you have to be very strategic about that. So that's the second point I want to mention, or actually the third point at this point. Always have cash on the side. And I've kind of said that in reverse. How do you have cash on the side? Just by what I just said, right? I should have said it the other way around, right? I should have started out with that. I might redo the video. I don't know, messing up a lot, but I think you get my point. I'm trying to spend a little bit more time explaining this so people understand it, they can dissect it a little bit more instead of me running through this content really, really fast. So, and all these points I brought up before, so they shouldn't be new. But I did want to spend some time because this is the way you win. Okay, it's what 5% of the market does. It's what the experts do. It's what I do. I've tested this theory. It works. I'm not giving you, I didn't read this in a book yesterday. I've been doing this for over a year now. It seems it's been over a year now. And it works. And I do it on a daily basis. And it works, right? What I just said, if you go back and listen to it again, follow it, it works. It's not financial advice, but I'm telling you that this is what I do and it works. Okay. So that's another point that I wanted to mention to you about keeping money on the side and having money to invest when prices go further and further down. And you might ask, well, what if I run out of money still? Because I don't have unlimited money. If you had $1,000, I start doing percents. I may start with a big chunk like 600, and then the next buy-in might be 300. The next buy-in might be 150. Then the next buy-in might be 50, right? So I'll keep dropping my amounts down. And as the price goes down, the miracle is that the prices will go down. I'm actually getting more for my money down at the bottom, even when it's $50, right? More than I did at the $500 or $600 level. So that's how you do it. I'm sorry. At one point in time, you will run out of money, but hopefully the market will come back up and then you will have money to sell. You'll sell, right? So you need to keep track of how much money you have invested, like that 1,000. I don't know if it's actually 1,000 because you dollar cost average and you might only have $800 in the asset at the time. So you need to keep track to say, okay, look, when is it time to sell? So I'm going to sell. It's on the uptrend. Now I got to be selling my money, putting it back on the side, ready for the dip again, right? And that's how you do it. You just need to keep track of your money. If you have $800 in, is that $800 valued at $900 now? Or is it valued at $750? Right? So that's how you keep track. If it's valued at $750, you don't need to be selling, right? Because you'd be selling at a loss. Don't do that. That's not what we're here for. We're here to make money. So what you want to do is say that if you have $800 in, but the $800 is now worth $948, then you have a little bit of profit there, and you have to look back at your plan and say, look, does this fit in line with my plan? If I sell some of it now, if I sell $50 worth, how does it contribute to my strategy and my plan that I had in place? Right? And that's how you do it, right? I wish everyone knew that, but that's how you do it. And the only thing that you have to do or be very good at is sticking to your plan, not having emotion, which is sticking to your plan, and having patience. If it's the right project, the prices will do what they need to do when they are ready. You cannot rush things. It might happen tomorrow, but you just got to just sit and wait. The money will be there to be made. All right, so this is kind of just a small example of one little asset that kind of may go back and forth in a market like this, right? You can still make money even though the prices are trending down. You can buy here, sell here, buy here, sell here, buy here, sell here, right? And you can make money although the prices are going down. So this is the advice for like short-term investing. And then I told you about long-term investing, which is a lot easier, right? None of this is really involved. You just keep buying, right? Every month you need to keep buying. Even if the prices are down. Oh, my portfolio's down. Buy more, right? That's the billionaires, you guys, are made in the bear markets, not the bull markets, right? How are you gonna make money if you're buying up high, right? You got to be buying low. When everyone's scared and fearful, everything's red. That's when the money is made, right? Buy when there's blood in the street. Remember that. Buy when there's blood in the street, even if it's your own. I said that before, and I didn't make that up. So anyway, so I know it's going to take a little bit long with this video. That's fine. I just wanted to make sure you guys get this because it's very useful if you stick to this. And a lot of people just don't know. What do we do? The markets are down. My portfolio's down. Hey, were you investing for today? No. Okay, well, then why are you worried about it? Buy more, right? So let me see what else. Lastly, I would say zoom out, right? Zoom out. And say, look, the market is down, but like if you zoom out, like is this asset really down? If you look over, like, okay, you're looking at this week, this month, this last 6 months. What has this asset done over time, over the last 3 years, 10 years, whatever it is? And typically these good projects have trended up, and this is just one little blip in the screen. And you've seen other times where it dipped down, but it came back, right? The strong assets will recover. So I wouldn't worry about the small dips that you see, even if it's an 8-week dip. We will a little bit of just, not advice, but this is just something to kind of think about. We probably gonna have some more time in this space before the prices shoot back up, like several weeks and or months. Again, I might be wrong on that, but we'll see if I'm right. Right. So that's what my thought is. But again, I've just explained to you how to make money in this type of market, and obviously how to make money long term. So hopefully one of those apply to you, and you'll find some benefit. If you have any questions, you can always ask me. Just put them in the comments there. But that's all I have for now, guys. If you find the content useful, take 2 seconds and hit the like button if you haven't already. Okay, I'm just gonna wait 2 seconds. Have you hit the like button? I hope you did, because it does help the channel and it doesn't cost you anything. Right. But you can make money, right? You can, if you listen to what I'm telling you, this will help you make money. Right. And hopefully that's the whole point, is that I'm trying to take all the news and sum it up to just basic advice, right, on how to trade and how to make money. I've covered a lot of points here today. So sorry it took so long to put another video out, but a lot of this stuff I've repeated before, but it's worth hearing again. Right. What do I do? I just told you. Right. So again, hit the like button, people, and subscribe to the channel if you haven't already. Tell your friends and family that it's time to buy, because there's blood in the street, and some of that blood is probably your own. But it's okay. Buy when the prices are down, and you'll be happy you did when the prices go back up. Don't wait till the prices go back up before you buy. All right. Till next time, you guys. Enjoy yourself. Be safe out there, and I'll see you in the next one.